Thank you.
Hello, everyone. Can you hear me? Yes. Amazing. Who's been to one of these before? My things, not his things. Okay, well, you know what to expect. If you haven't been to one of these before and you don't know what to expect, I'm really sorry in advance. So the last time I did this, I didn't do this for a couple of years. I did do it for several years, probably 4 or 5 years when I was back at Reed. It's fantastic to see some of the Reed faces in the room again. The last time I did it, I think the title was Things Can Only Get Better. This time, the title is We Thought Things Would Get Better. I'm not entirely sure whether they have or not, but we're going to run through that. So we're actually going to start at a very high level with the global macroeconomy. If you've been through this with me before, you know this is where I like to start. Are there any economists in the room? Fantastic. That means I can get away with saying anything. I am not an economist, and I don't know what I'm talking about, but I've got loads of charts and slides for you. So there is a reason that we're going to be following a story. There is a narrative thread through all of this, but it does mean we're going to be looking at graphs of stock exchanges, which I know that you're going to find absolutely thrilling. So up here, hopefully you can see my charts. You don't need to see them in detail. You just kind of need to see the direction that they're going in. So these two charts, on the charts you can see that there are two stock indexes. So the S&P 500 is all of the top 500 largest publicly listed American companies. FTSE 100 is the largest publicly listed British companies. And these look pretty good, right? So if we were to look at these, we would say that this looks like a pretty good economy, which arguably it is. And they have actually had a fantastic year. So both of these stock indexes have finished at all-time highs. So they have never been higher than this. In October and November, respectively, they finished at all-time highs, which we think is probably a pretty good sign. You'll probably notice a dip in this year. You see the dip there? Is that right in the middle? Any guesses what that was down to? It was Liberation Day. Thank you very much. So that's Liberation Day. Thank you, President of the United States. We're going to try and leave him unnamed for the rest of tonight. So the President of the US decided that it would be a brilliant idea to do some stuff charging other countries and therefore the American people for all the goods that came in, which turns out to have been a brilliant idea. And it tanked the stock market, although it picked up pretty much immediately. So clearly he knows what he's doing much better than I do. But if we take those two graphs and we put them over the top of each other, and we have a look, at this time, I've changed the axis a little bit. When in the last chart, we were looking at the value. Now we're looking at the growth. And if you look at the charts, I'm going to try and point at these so you can see them. You can see that they kind of tracked along with each other. This is a 23-year view of the charts. So you can see that up until about 2012, in terms of growth, it's not the actual value because there's a difference, but in terms of the amount of growth that each of them was receiving, they look pretty similar. And then they started drifting apart a little bit. And that drifting apart got worse and worse and worse. Some of that is related to really big things like Brexit. Some of it is related to COVID, but it's not all that. And one of the things we're going to dig into, because we're doing tech trends, is what the impact of tech on these stock indexes, these lists of the largest companies in the world. What is the relationship between tech and the stocks? One of the most important things that drives that difference between where the FTSE is and where the S&P is in the US, most of their largest companies are tech businesses. And a phenomenal amount of money is wrapped up in the valuation. So the amount of shares that are in the public market and how much each of those shares is worth, multiplied, is the value of those firms. So these are all publicly listed. They're not private, so we know how much the market thinks they cost. And if you look at the largest firms in the world, the 10 largest firms in the world, of the largest 10, 8 of them are in the US. Only one of them is not a tech company. So TSMC on here is actually the company that makes NVIDIA's chips for it and a bunch of other people's chips. All of the other businesses, except Saudi Aramco, are US tech businesses. And one of the one of the interesting things about Saudi Aramco is that it is, in theory, the Saudi kingdom's energy and chemicals business, but also it's moving ever more into tech. There is a natural follow-on from the largest businesses being in the US and being tech businesses, in that if you look at the richest people in the world, they are mostly working in tech. So if you actually were to break down the estimates of the world's richest people, the 10 richest people in the world saw their net worth increase by $700 billion last year. There is an ever-widening gap between the richest people and average people. And one of the other things, I will dig into those people a little bit more, but one of the other really striking statistics is that in the US, the top 50% of all spending in the US, consumer spending in the US, comes from 10% of the population. So there's a real concentration of wealth in a very small number of people in the US. Most of those people probably work for tech firms. And when we look at the world's richest people, I know this is quite small, you can see Elon Musk with his $1 trillion Tesla package is right at the top there. He's worth more than almost anyone else in the world. Larry Ellison is the founder of Oracle. Then there's Jeff Bezos from Amazon, Larry Page, who's Google, Mark Zuckerberg from Meta, Sergey Brin, who's the other Google founder, Bernard Arnault, I'm sure I will get comments on my French pronunciation, is the CEO of LVMH, the luxury goods retailer, who is the only person on this list who isn't in tech. Jensen Huang is NVIDIA, Steve Ballmer is Microsoft, and Michael Dell is, well, Dell. So there is a real concentration of wealth in companies and in individuals, and most of that is related to tech. We can take another view. I know you're going to be so fed up with graphs at the end of this. We can take another view of the S&P 500. Believe it or not, this is 500 companies. But of these 500 companies, the way that this graph works is this is 500 companies, it's the S&P 500, and 7 of these companies, the ones that I've put little yellow squares around, 7 of these companies are responsible for a third of the total value of the S&P 500. So if that entire 500 company stock worth, 7 companies make up a third of it. Those 7 companies, you've probably heard them called the Magnificent Seven. Whether they're actually magnificent is definitely open to some discussion. But the 7 are Microsoft, NVIDIA, Apple, Amazon, Google, Tesla, and Meta. And you can see some other names on here. The color, so the size is how much they're worth. The color is how much growth they've had. And what we can see is that there's been an awful lot of growth in these large businesses. So they're all green. In fact, most of the S&P 500 is green, not all of it, but most of the green ones are tech companies. One of the things that you can see, if you look at most of them, their growth, so Microsoft, Apple, Amazon, they're about sort of 13, 14%, something like that growth. NVIDIA is at 30% growth. Google at 87% growth. And we'll talk a little bit about why Google is a little bit different later. Tesla is a real outlier, and we're definitely going to keep coming back now and then to Tesla because it shouldn't be worth this much money. So we can see that there's loads of growth in these large businesses. So they're big, they own most of the value of the S&P 500, and they're still growing. So we're going to slightly move away from the stock markets, and we're going to start talking a little bit more about the actual tech companies themselves. We're going to talk about the unicorns and the tech giants, the Magnificent Seven. And as we go into it, we'll take the same look at the S&P 500, but we're going to color it slightly differently now. So this graph, same thing, same positions. We've got Microsoft and NVIDIA and Apple, the Magnificent Seven again, but now everything's red. It's just because I made it red. It's actually not because I made it red. This graph, instead of showing you growth, is showing you something called a PE ratio. Who knows what a PE ratio is? Fantastic, 2 people. That means that I'm going to have to explain it. I don't understand any of these things. It just came off ChatGPT earlier. PE ratio is the price to earnings ratio of a business. So if we want to value a business, especially a business that is floated on the stock market, so the value of the business as it's represented is the number of shares that are on the market multiplied by how much each of those shares is worth. That's the value. But the value is what the market thinks that the businesses are worth based on what they are prepared to pay for a share. So it can go up and down. So that value can be linked to the revenue of the business, how much money they're actually making, so what the amount of money that's coming into the business is. It could be argued that some businesses are worth whatever the revenue is. So if you make $100, you're worth $100. That would be a 1 times multiplier. If you think that that business is really exciting and maybe over the next few years is going to keep growing, it might be a 3 times or a 5 times multiplier. But these companies are not a 3 times or a 5 times multiplier. These companies are substantially more than that. So you can see that most of the S&P 500 is reddish. Not all of them. Like down here at the bottom left, that's JP Morgan. It's kind of a sort of reddy color. That's kind of what a normal business should look like. These companies, Microsoft, Nvidia, Apple, they're actually sort of in this 30 to 40 ratio. Now, when a PE ratio goes high, when a price to earnings ratio goes very, very high, like 30s and 40s, what that means is that the people that are buying their shares think that the future value of the company is worth much more than it is today. So they think that, okay, well, if I buy this now, those shares are definitely going to pay off later. Maybe that's because they've got a really good product. Maybe they've got a stranglehold of the market. Maybe Elon Musk runs the company. And that is the case with Tesla. So you see these really good companies, the ones that grew 80% last year, Google. Google's at 30 times price to earnings ratio. Tesla has a 287 times price to earnings ratio for some reason, because it's a tech company. They're all tech companies. We're going to dig in a little bit more as to why Tesla can be considered to be worth that much money. But let's move on. I talked about how much all of those companies were worth. They are worth that much because people think they're worth that much. That's how the stock market works. People pay money for shares. Whatever you pay is how much they're worth. So that PE ratio is driven by people speculating they're going to be worth a lot of money. They're speculating that they're worth a lot of money because they can see loads and loads of investment going on in those tech companies at the moment. So one of the things that's happening is everybody's looking and seeing Oracle's just done a deal, OpenAI's just done a deal, Nvidia's just done a deal. Look at the amount of money, look at the amount of sales that are going on. But if we look into it a little bit more, there is a problem that is happening with these charts. What we actually see is these companies are investing in each other, and Nvidia is at the center of it. Nvidia is one of the most valuable companies in the world. So Nvidia, to give you a sense of how this works, Nvidia has committed to investing $100 billion in OpenAI. OpenAI then takes that $100 billion and says, thank you very much, Nvidia, for giving us this investment. We're now going to buy loads of chips from you. They also say to Oracle, Oracle, we would like to buy some data center space from you. Can you build us some data centers? And I think this was $300 billion. So OpenAI did a $300 billion with Oracle. Oracle takes that money and decides to buy some chips from Nvidia. And this potentially is something that is called round tripping or circular investment. And that's bad. But there are critics of that skeptical position that says it's bad and says this just looks like vendor financing. In the old days, if you needed to buy a really expensive server, it's likely that the server company would have sold you finance so you could buy it. So some people say it just looks like that. A lot of critics say this economy looks really, really bad. Not only is the stock market currently more dependent than it ever has been in history on the smallest number of companies it's ever been dependent on, but those companies are just investing in each other, which gives the illusion that there is lots of money moving around. Whereas really those companies are inventing money and passing it around in a loop. So this is actually a really deeply unhealthy economy. If we take a step back from the biggest companies in the world and start talking about something which is probably closer to some of the people in this room's interest, we'll talk about where the startup money is going. It's really important when we look at startup money to think about the way that the tree works. If you're a startup, you go to a venture capital company and they give you some money. But effectively, the way that the money works is that there's another economy at work here. So they give you some money, they want you to grow, they want you to have some sort of exit. That could be an acquisition from a trade, somebody in the trade, like another business. It could be a private equity company, or it could be that you have an IPO, an initial public offering, which is where people can buy shares in your company. So here, we're going to have a very quick look at where the PE money is going. That's private equity, and that's where these private equity businesses buy pretty big businesses. They're normally writing checks of hundreds of millions of pounds. If we have a look at this, then in one of the things that we can see from this graph, the one on the left, shows the regions that the money is going into over time. So as we go left to right, you can see that the graphs that go from 2016 through to 2025. And you can see that there are actually some really good years. Around 2021, as we came out of that first year of COVID, there was lots of activity in private equity, and almost all of it was in North America. In fact, private equity in Europe is about a sixth of the size that it is in North America. So most of the private equity money is going to North America, which probably isn't a surprise because that's where all the tech businesses are, and it goes in a big loop. But also, the slide on the right shows us the deal count. So the deal count, as you can see in 2024, 2023, 2022 is pretty solid. 2025 is lower because we haven't finished it yet. But if we look at it, we'll probably see that that doesn't exceed any of the previous years. So deal count is actually flat. The reason that the one on the left, we're actually seeing the values of some of those go up is because the size of each deal is bigger. If you actually look at where that money is going in terms of the IPOs, all of those private equity companies want to sell to another private equity company or a really big business, or they want an IPO. So we're interested in IPOs as startups, because if no IPOs are happening, investors can't get their money out and they won't invest in you. So we need lots of IPOs to happen because it flows back to us. Because then when they write us a check for 100 grand, that's because an IPO has taken one of their portfolio companies off their hands. And actually what you can see is, again, there was a really big boost in these happening in 2000 and 2021. So there was IPO activity, it sort of came out of COVID, lots of deals were done. It's like the market's coming back, there was optimism again. So we did loads of deals because there had been a lag. And since then, it's been a really flat market. So actually, in terms of startups, there isn't really much happening. You can see this graph towards the right side of this graph. It's pretty much in the doldrums, both in terms of value and in terms of the deal count. It's not particularly interesting. And Europe is doing much worse than the US. The US is coming back faster. So in venture capital terms, if we were to look at where the venture capital money is going, not private equity, not IPOs, but where are VCs spending their money, there's been one really big change on this in that pretty colored graph with the pink in it. To the right of the left-hand graph, you can see a big change in the bright pink in the middle of that graph. That is software. Effectively, that is where all of the AI money is going. So that bar chart breaks down each of the sectors that the money is going to. And the big change has been that this year there is loads more money going into software sales. We can also see in that chart on the right, what do we see on that one? That's total global venture financing. And we can see that there has been, remember I said there was a boost in what looks like the value. So we're seeing that those bar charts are higher. That's because that's the value, the bar charts are the value. The lines are the count. So we're actually seeing fewer deals, quite depressed economy for VC, but the deals are bigger. The deals are bigger because of AI. So in terms of in Europe, we'll have a really quick look at how Europe is doing against the whole of the world. So total number of billion-dollar European companies has been increasing year on year. So we've now got 413 billion-dollar European companies. That has gone up. But actually, you can see what this graph shows you is the number of new billion-dollar companies worth $1 billion or valued at $1 billion. And we're actually not creating that many at the moment. Again, there was a really big boost in those in 2021. So lots of investment, lots of big valuations, lots of unicorns. But it's not a particularly interesting market. And Europe is actually much less interesting at the moment than the US. In terms of where's the best place to be if you're a startup, what country should you be in if you're a startup? Well, I mean, the easy answer is not in Europe at all. If you want money as a startup, you should definitely be in the US. That's where all of the deals are happening. But if you are in Europe, then big shout out to London. We definitely have the easily the greatest amount of capital invested in startups. I think the one on the left is actually, this one is actually private equity, but the same is true of private equity and venture capital. So if you want to get an investment, be bought by a private equity business, the place to be if you're in Europe is definitely London, far and away. After that, Germany and France, and then you can see on the right-hand side, that chart is the share of the private equity deals by region, and you can see that a pretty big chunk of that is UK and Ireland. The place that's suffering the most at the moment is Southern Europe, and that's typically Spain and Italy that is making up the deals in there. But we will talk about an Italian success story in a minute. If you were to look at where are the best global hubs, this hasn't really changed over the last few years. Still San Francisco. So if you want to start a startup, the place to be is still San Francisco, unfortunately. After that, it's New York. And for a long time, New York and Boston were fighting for second position in the US. London is the third place. So another big up to London. You'll also see it on there. So Boston is the last of the US cities. You've got LA and Boston. And the other sort of honorable mention on there for Europe is Paris. You would probably see Paris, Berlin, and Stockholm all mentioned in the same breath. And it might well have been that we would have seen Stockholm on there recently. This is an index. Somebody's come up with the scores for this, but Stockholm's done really, really well recently, especially with Klarna. And obviously it was the home of Spotify. So you would normally say in Europe, still, London, Paris, Berlin, Stockholm are the places to be if you want to be a startup. There are, in Europe, some companies that are worth $10 billion, euros, not pounds, but dollars or euros. And of those decacorns, the interesting thing about this, something to bear in mind, is these are companies that are privately owned. So these are not publicly listed. To be considered a unicorn or a decacorn, you have to be privately held. That means you're owned by investors, not owned by a stock market. So that's one of the things that is important to bear in mind here. On this list, 4 of the decacorns are from the UK. So the top 2 of those are Revolut and Checkout.com. Also a financial business called FNZ and the Access Group, which makes really terribly boring software like HR stuff. But it's on the list. If we'd looked at this only a few months ago, if we'd looked at this in February, you would have seen a Swedish company on here, Northvolt. But unfortunately, Northvolt filed for bankruptcy in the US at the end of 2024 and in Stockholm in 2025. We will talk a little bit more about Northvolt in a second. So the UK is still representing both in terms of the amount of investment, the size of the businesses that are here. This, fortunately for all of us, is the place to be in Europe. Let's talk about Northvolt quickly. I'm going to talk about the big winners and losers in terms of European startups. Northvolt definitely wins the award for the biggest loser. Northvolt, if you haven't heard of it, made batteries for electric vehicles, and they were the great hope for certainly Northern Europe in terms of competing with the US and China in terms of electric vehicles, home energy storage. They opened their first factory in 2021 in Sweden. They were a great Swedish success story and are now also the largest industrial failure in Sweden within sort of living memory, certainly. There were a few reasons for that, not least they kept killing people, which wasn't considered to be a good thing. So quite a few people died at Northvolt factories, and the Northvolt executives were certainly accused of operational mismanagement and hiding the fact that people had died. And in terms of the big winners, a company that you may not have heard of, but you will have heard of some of the companies that they're buying, is a company called Bending Spoons, which probably has a much fancier name in Italian. They are an Italian company, and they're not quite a VC. They're not quite a company that builds software. What they seem to do is they go around and they buy businesses and they start running them. So Bending Spoons has actually bought a bunch of companies you've probably heard of. One of the first was Evernote. So if anybody used to use Evernote to keep their notes, Bending Spoons bought them. And Bending Spoons have a really interesting playbook. What they do is they buy a company, and then they look for the things that the company is giving away for free. So with Evernote, it's like, here are your freemium model stuff, so you get loads of free use of these products. They look for those, they cut them, and then they sack a bunch of people, and then the businesses are much more efficient. So they've done that with companies like Evernote. They did it with a photo editing app called Filmic. They did it with Meetup. They did it with a company called Brightcove, which is a video platform, which some people may have heard of. But the companies you will definitely have heard of is they have just announced they're doing a deal for AOL. So AOL, the old-timey internet company that still just about exists, they're buying AOL, and they're buying some of the properties that go with that. You may remember this. This will bit of foreshadowing. AOL Time Warner was one of the businesses. The merger of AOL Time Warner was actually probably the business that kicked off the dot-com bust. So the collapse of the dot-com boom happened in late 1999 and early 2000, and the big signal for that was the merger of AOL and Time Warner. So now Bending Spoons are buying them, and they also have announced that they are buying Vimeo, the video platform that used to be one of YouTube's few competitors. So they were the winners and users. That's sort of European VC, but let's have a look. And unfortunately, I do have to talk about AI. We're going to keep talking about AI. So now is definitely a good time to get some more drinks in. if we look at where the money is going, the question is all the money going to AI? The answer is, yeah, pretty much. By and large, the three biggest investments, so this is worldwide investments that we can see, so typically Europe and the US. The largest investments are Anthropic, who make Claude, X.AI, which Elon Musk has something to do with, and Mistral, which is a French company, French AI company. The interesting thing about all of those businesses is they are building foundation models. They're doing real AI work. They're training the models that sit underneath things like ChatGPT. They're the ones that are getting the big bucks. One other thing that is very important to pick out, though, is that although there was that huge growth in software and in AI investment, that's not the only thing that's growing. There's something that's been in the doldrums for years that nobody's been paying any attention to, which is starting to get an uptick in interest from investors. And that's this early stage industrial tech startups. You may ask what that is. Well, that includes things like defense firms. So actually, the reason that we're seeing more investment in this industrial tech is because not only is there more interest in countries buying more defense tech for themselves, so whether that's actually weapons or things like AI systems, that's one of the things that they can do. But there's also this president of the US related introspection where they're thinking about bringing much more manufacturing back into the domestic US. So they want to rebuild the industrial heartland of the US. And so they're starting to look at startups in the US. So if you want to come up with an idea, probably not a bad idea to do something with AI and weapons. That would be great. And I came across, as I was putting this together, I came across this really interesting Medium post by a researcher, an engineer, who went and looked at 200 different companies to see whether these are startups that say that they are AI startups. So they're like, oh, I'm an AI startup. And getting funding because they're AI startups. And what he did was he started taking apart their products under the hood to see where the traffic from their websites was going. And when he did that, he found that of the 200 that he looked at, 73%, 3/4 of them, were just making API calls, just using someone else's technology. So they were literally just connecting to ChatGPT, they were connecting to Claude, they were bringing it back, and then they were saying, oh, I'm an AI company. You're not an AI company, you're just a normal software business, but you've got an AI stamp. And they're cunning investors, but the investors love it, so I don't care. They're all made for each other. So if you want an AI startup, just make sure that you hide it a little bit better than these people. He did find that some people are genuinely doing interesting things with AI, but for the most part, any company that says it's an AI company is just using ChatGPT under the hood, which is fine if ChatGPT is going to be successful. So let's talk about AI, because I know that that's what you all really want to hear about. How are the AI companies doing? Well, I mean, there's a few really big AI companies. So we've got OpenAI, who make ChatGPT, we've got Anthropic, who make Claude, and we've got Google, who make something. And Gemini. Oh, Gemini, I knew I had a name. Yes, they do make Gemini. So if you ask them, they're doing brilliantly. That's what they will tell you. So if we look at it, Anthropic has quintupled its revenue from $1 billion to $5 billion. Remember, this is revenue. It's how much money they bring in. That doesn't actually mean that they're making loads of money, but it's great. They've gone from $1 billion to $5 billion. Google has said that it has seen demand for its AI services because it actually provides a lot of APIs for businesses that pretend they're AI startups. It's seen its business triple in a 6-month period from May to October. And ChatGPT, excitingly, ChatGPT is seeing its weekly active users, its WAUs, it's seen its weekly active users grow over time. So in February, it claimed that it had 400,000 weekly active users. And then in April, it claimed that it had 800,000. So more than that now. So it's a fantastic growth story. It's the kind of thing we want to see. Big round of applause for all of those. Don't applaud. They don't deserve it. Don't applaud. So thing is, those companies, those 3 companies that I've talked about, are probably losing money every time they sell you a token. So although that sounds like it's a really great business, the cost to train the AI models is actually not increasing linearly. We might expect, as techies, we generally see that the speed of processing increases, the cost of processing goes down, the cost of storage goes down, and things net out. So you can often make a bet, well, we think this is going to get cheaper to run in the future. The problem for these companies is that it's reported that the cost of training the AI models is actually going up exponentially. So it's not going up linearly, it's going up exponentially. And we can kind of see that in that graph. That's the training cost per model. Some of these are assumptions. We don't have deep insights into what people are saying. But the first model of ChatGPT, the one we got really excited about, the one that we probably all started writing haiku with, ChatGPT 3 costs 50 million there's some haiku writers in the audience, costs 50 million to train. ChatGPT 4, where it started getting really impressive, that costs 500 million to train, $500 million. ChatGPT 5, which was a bit of a damp squib all in all. It didn't have the jump that 3 to 4 did, but GPT-5, still an impressive model, cost $5 billion to train. So the cost for these businesses, you remember these are the businesses that are in that circle paying each other to buy the GPUs, to spend the money, to get the data centers. They're still not anywhere close to actually making any profit whatsoever. If we break that down a little bit more, we can actually see OpenAI and Anthropic, the two of the biggest model providers, both lost $5 billion. So yeah, their revenue went up, but they were still making loads of loss. Now, in the next year, ChatGPT say that they're going to only lose $8 billion. So it's good because their loss only goes up by $3 billion. Anthropic, they're being much more conservative and say they're only going to lose $3 billion. A huge amount of their cost is salaries. I did have a slide in here, it was just too depressing, about how much an AI engineer works. It's not unusual to see packages for AI engineers in the millions of dollars now, significantly higher than millions of dollars. You have to be lucky enough to get the offer. I haven't yet. If anyone is a recruiter, then do let me know. So there's a huge cost in salaries, a huge cost in the hardware that it takes to train the models. But we're also, from some of the things that we're seeing, we can pick apart some of, Microsoft is a public listed company. It has a stake in OpenAI. It has a big stake in OpenAI. It's one of the first investors. And so we can pick apart Microsoft's accounts. And from that, we can infer that OpenAI spent $12 billion on inference between 2024 and 2025. So spent $12 billion training the models, and that it made at least $2.4 billion in 2024. So these aren't impressive numbers when you look at them. And it kind of gets a little bit worse, because if we look at consumers here, then one of the things that we'll find is that in the West, so particularly the US and the UK, consumers really aren't digging AI. So in a survey that was run, I think this was run by Edelman, with a fairly significant number of respondents, they asked people in China and in the US, but similar results were reported in the UK, how they felt about AI. And the result was really, really stark between the two. In the US, similar results in the UK, they reported that 49% of people reject the growing use of AI, and only 17% embrace it. So in the West, we don't really like AI. In China, the opposite was true, and it wasn't even quite the opposite, it was even more stark than that. In China, 10% reject AI, and 54% embrace it. Because think about the cultures that we have. There are very significant state-run, state-owned, state-managed culture in China, where they're much more used to a single sort of line of control coming down from the state, whereas in the West, we're not used to that. China, as you can see on this graph, the colorful graph, this is their answers to the questions. Now, the color coding is for green, 2/3 of people agreed with the statement. If it's sort of darker orange, then it's 1/3 of people agreed with the statement. And what you can see is that the UK and the US reported almost identically on that survey, and China was really positive in all of them. And let me read out the things that China was agreeing to. So the Chinese respondents said that they believed, 67% or more of people believed, that AI would solve rather than worsen climate change, that it would improve rather than worsen people's work lives, that it would improve rather than worsen people's mental health, that it bridges the divide and reduces polarization rather than widen the divide, and that it would lift people out of poverty rather than force people into poverty. In the UK and the US, that last one we really disagree with. We definitely don't think that AI is going to do that. So that's just an attitude thing, but the problem is they're the people that are buying, or are supposed to buy, ChatGPT and Claude's products. We're supposed to sign up, put our hand in our wallet, and pay for those things. So as I was putting this together, I thought it was worth trying to tell you what the best AI model was, so I started putting slides together and realized there is absolutely no point. So this slide was out of date when I wrote it. It's definitely out of date because it's at least 3 hours old now. everybody got really, really excited when, what was that Google product called? Gemini, thank you very much. Yeah. So everybody got very, very excited. This is November the 18th when Google released Gemini 3. And Gemini 3 was given a test. And this test, charmingly and not threateningly at all, is called Humanity's Last Exam. That is a test for AI agents, for LLMs, that is designed to be really, really difficult for them to pass. And Google absolutely smashed it, beat every other model in this particular test. People were very excited about it. It wasn't the only test that it did really well on. It did really well at coding tests. So very, very excited, especially if you work for Google on that day. And isn't Gemini great? Unfortunately, the day after, ChatGPT launched a new model. This one was very specifically for coding, so they launched a model for coding, and they smashed all of the benchmarks for coding challenges and even beat Gemini 3 a day later, which was probably quite disturbing for Google. But then a week after that, Anthropic launched a new model. So Anthropic has launched a new model. This is Opus 4.5, and on a different set of tests, actually some the same and some different set of tests, Opus 4.5 beats all the other models. So today, Opus 4.5 is probably the best. You can kind of look at them all on the screen. If you were to ask me today, which one should I use? I don't care, use whatever you want. Probably the best thing that you can do is decide by star sign which one you want. And just as a tip, ChatGPT is a Sagittarius. So if that's what you like, then go for it. I am going to start talking a little bit more about China because it's really important. Beginning of this year, a company called DeepSeek, a Chinese company, released a product or an offering in its line of LLMs called R1, a model called R1. And that really threw the cat amongst the pigeons. Don't do that. Pigeons don't like it. But people got very heated because DeepSeek was allegedly enormously, like an order of magnitude, cheaper to train than any of the US models, US or European models. They've all kind of recovered from that, and DeepSeek sort of went away. It was the talk of the town for about a week. But DeepSeek is still doing amazing things in China. And one of the things that I found really, really fascinating is that they have released a research paper, the paper on screen here, which has discovered that if you think about the way that an LLM works, many of you will know this, but it takes each word and it starts predicting. When it's responding to you, it starts predicting the words that come after it. When it's reading, it reads each word at a time. So it has to do both of those things. But LLMs at the moment work word by word by word, and they're trained on lots and lots of words. What DeepSeek did is they came up with a way of, instead of giving words to their model, they gave pictures of words to model. Now, that's completely the opposite. If you were to take a picture of something today, take a picture of some text and feed it into ChatGPT, the first thing it's going to do is run it through something called OCR, optical character recognition, and it's going to turn it into a stream of words. And then it's going to figure out, well, this word and this word and this word. But think about how you read. You probably don't sit there and read and go, this word and then this word and then this word, and I understand the sentence. You probably scan the sentence. That's how your brain works. And human brains are absolutely incredible. What DeepSeek did is they realized that if you give a picture of the words to their model, it works almost as effectively as if you give it the words, but it actually can reduce the size of the data that it needs down by about 90%. So it only takes 10% of the storage. Now, that doesn't make it cheaper to train. It doesn't help in lots of other ways, but it does mean that some of the storage related to AI is going to be way more effective by using these really radical techniques. And this was like, that's crazy. No one ever thought of that. Well, the Chinese did, DeepSeek did it, and they've proved it. And we're going to keep seeing, even though we're not going to keep training on those big models that we've been training for ages, we're going to keep seeing advances like that. Now, for some people, it might come as a surprise. For some people, it won't. But the problem with AI that we're facing today isn't getting the chips from NVIDIA. So NVIDIA's doing quite a nice job. Fun fact about NVIDIA, it doesn't actually make any chips itself. It just does the design. So it doesn't have any factories making chips. It just gives people the design and gets them to make it. So it's worth an awful lot of money for a company that doesn't have any factories. But the problem isn't getting the NVIDIA chips, or any of the other options are available. The problem is there isn't enough power in the world. Or at least there isn't enough power in the US and Europe. If you were there are some quotes on this page, particularly the one at the top is Microsoft CFO, Amy Hood, so Chief Financial Officer, who said, we've spent the past few years not actually being short of GPUs. GPUs and CPUs are the things you use to train models. We're actually short the space and the power. They don't have data centers to put the chips in. They don't have enough power to power the data centers. Andy Jassy, who's the boss of Amazon, said overall in the industry, maybe the bottleneck is power. I think at some point it may move to chips. It's not chips today, it is power. Satya Nadella, the Microsoft CEO, said the biggest issue we're now having is not compute glut, but it's power. And it's sort of the ability to get the data center builds fast enough and close to power. That's my problem today. It's not a supply issue of chips, it's the fact that I don't have warm shells to plug into. This is public record. They are saying we don't have enough power. So if you want a really good idea, go and build some power stations. If you look at, there are some graphs around of what the predicted future growth of power stations in the US is. Suddenly, they're going to build lots and lots of power stations. Unfortunately, power stations take quite a long time to build. So the graph of actual power stations that are being built and the ones that they're saying they're going to build because investors want it is really quite different. This graph here shows you the US power generation. And what you can see broadly is that it's been flat for about 15, 20 years. So since about 2000, it's been flat. Now the makeup of it has changed. So they've stopped using, I don't know, kerosene lamps or something. That was the brown one. And there is more renewable energy. They're still using quite a lot of coal. But there is legitimately an increase in renewables in the US. But the amount of production in the US is not going up. And the big problem for AI is there's not data centers with enough power to run them. So the US has a 20-year problem because you needed to be building those power stations 20 years ago. Now, hilariously enough, one country on the planet has been building power for the last 20 years, and that's China. So China has a really significant advantage over the US. It doesn't change administrations every 4 years. It can take really long-term views. Since the late 1990s to the early 2000s, there has been a strategy in China that they realize we are going to need more power in the future for our growing population. China is an incredible investor in energy, in building power plants. And it has a bad reputation. So lots of people think that China is a dirty energy producer. China themselves spend nearly as much as the EU and US combined on building new power stations. They are building coal power stations, but they're next generation clean as you can get, coal burning power stations. But of all of the renewable energy power capacity that is being deployed in the world at the moment, China is deploying half of it. So China is a world leader in green energy production, even though it is still relying heavily on coal and some of the other forms of power. It is absolutely outstripping everywhere else. And that's linked to the whole industrial complex in China. It's not just that they're generating more power. A lot of the things they're doing, like AI and like electric vehicles and self-driving cars, are linked to the fact that they are going to have more power available to them as a country. So there have been some novel solutions to the fact that America doesn't have enough power. Google recently decided that it was going to announce this Project Suncatcher. This is my image, not Google's. Thanks very much, ChatGPT. What Google have decided they're going to do, they have something called a tensor processing unit. That's like their version of a GPU. It's the chip that they train AI on. So they have decided they're going to bombard some of their TPUs with space particles, and they came back and said, yep, it's all good. They still work when they're bombarded with space particles. So we're good to go. We can put CPUs in a box and we'll send them to space. Now you might think that's great, because in space there's a sun. That's good. There's no clouds in space, not significant ones anyway. So there's lots of solar, and it's very cold, right? So it's all fine. Now, I thought it was going to be really good that you put these in space and it's very cold and so you can keep things nice and cool. It seems that there's actually a really big problem in space because there's no atmosphere. So you can't actually cool things very easily. You have to cool it by radiation. So these big boxes in space don't just need solar cells, they need really big radiators pointed into the dark void of space. So they're going to be testing that, and hopefully Google will send rockets up with AI boxes, which will be fun. If they break, it's going to be really hard to turn them on and off again, because that's how you fix things. China actually has another idea, and Microsoft did do this first. So Microsoft a few years ago, I did speak about it in one of these events a little while ago, did try sinking data centers under the sea and had some success with it, but found equally that it's quite difficult to service things when they've been sunk. But the Chinese are having a real crack at this, and they're actually going to be launching the world's first underwater data center, deep sea data center. It's going to be sunk 35 meters under the surface, and 95% of the predicted power is going to come from renewables in terms of wave and solar energy. So yeah, it's a bit of a bitch to service, but it's probably easier than low Earth orbit, which is probably a step harder than that. So let's talk about transport very, very quickly, because this is, we mentioned Tesla earlier. Let's have a look at how transport is working. Well, from a tech perspective, one of the things that's really interesting is the growth of electric vehicles. And it's actually all kinds of electric vehicles at the moment. And it also really, really depends where you are. In Europe now, not worldwide, but in Europe, 50% of vehicles, new vehicle sales, are some form of hybrid or electrified vehicle. So that could be hybrid, could be plug-in hybrid, or could be battery electric. So about half of new sales are electrified. In the world, China is a leader in EV adoption. It's nearly 2/3 of all of global sales comes from China. So if we look at all electric vehicles sold all around the world, 2/3 of the total global sales are in China, because they've got loads of energy. So they can power their battery electric cars. They can just plug them in, which is great. In the US though, so in Europe, Tesla is definitely losing its market share. It is being very, very substantially replaced by companies like BYD. You've probably seen them on the streets, the Dolphin and other cars. BYD and Geely and Xiaomi are Chinese companies that are increasingly taking European market share. Not so much in the US, although those manufacturers are taking more share in the US. But Tesla is still dominant in terms of EVs in the US, but they are losing market share. Last year they were 49% market share, this year they're 41%. So the gloss is coming off Tesla, and there are definitely cheaper and better alternatives to Teslas that are now being made available. So yeah, in Europe, the UK is probably considered a laggard. We're not buying electric cars as much as some of our neighbours. Germany is the leader. They had 45% growth. France is somewhere in the middle between the UK and Germany. There is something really, really weird going on with car manufacturer valuations, though. You saw right at the beginning, remember Tesla? It's 287 times PE and like all kinds of weird numbers. Tesla is probably worth 10% of the value that the markets ascribe to it. And you might think that's fine. So you might think it's okay that Tesla is worth that much because they've got the Optimus robot and they've got full self-driving and they've got robo-taxis, right? That's why it's worth that much more, because they've got all those things. We'll talk about those. So if we have a look at Tesla and we try and think about its valuation, the graph at the bottom there, that's manufacturers by their market capitalization. That's how much the market thinks that they're worth. So you can see on this graph, it looks a little bit weird, but there's Tesla, and then there's Toyota, which is the world's largest car company, and then you've got Volkswagen Group, which is kind of not even really there. The graph above it is European vehicle deliveries, of which the largest bar chart on that is VW Group, and then Stellantis, which is Peugeot and GM, and then Renault Group, then Toyota Group, and BMW Group. So these are all companies that you know. But if you were to look at the valuation, the list down the right-hand side, Tesla is way above all of them. Global valuation, global market cap. This is how much they're worth. Tesla is worth, according to this, $1.1 trillion. And then Toyota, the actual largest car company in the world, is worth $203 billion. Xiaomi, the mobile phone manufacturers, also make cars. They're worth $100 billion. BYD, the car company we just spoke about, are worth $93 billion. Ferrari are worth an awful lot of money because Lewis Hamilton. And then you'll see some of the other actual proper car businesses underneath it. Tesla definitely has something weird going on. So let's talk about one of the planks in Tesla's enormous valuation, and that's full self-driving and robo-taxis. One of the things that we saw this year, GM had a subsidiary, not even a self-driving and a robo-taxi subsidiary called Cruise. So that was going to be ride-hailing. You go on the app, you get a self-driving car to come and pick you up and drop you off. Unfortunately, that collapsed. One of the reasons it collapsed, apart from the fact that it's really difficult, was the fact that at one point a pedestrian was thrown in front of a Cruise vehicle and then dragged behind it, which wasn't considered to be good marketing. So GM has shut down Cruise because hard things are hard. The surprising current winner of this self-driving ride-hailing world is Waymo. Waymo is primarily owned by Google. It's a Google offshoot. And Waymo has announced earlier this year that it had, so in around Easter time in the spring, it announced it had 250,000 paid weekly active rides. So 250,000 people riding the cars, and that's primarily in San Francisco. Apparently, I haven't seen it, but if you go to San Francisco, there's like queues of Waymos queuing up to take you places. You get in, and the car drives you there. There's no one else in the car. On the 2nd of November, and going back to this narrative around how China is doing, Baidu has a subsidiary called Apollo Go, and it announced that it has also got 250,000 unsupervised paid rides in November this year. Days afterwards, Waymo announced that it's now 450,000. So we're seeing a really significant increase. Waymo is absolutely crushing it. So Waymo is doing a brilliant job. Now, do expect that the Chinese firms will come roaring after it, because it's much easier to get regulatory approval in China, especially if it's something that the Chinese government wants to do. On here, there's also mention of Uber. Uber has just signed a deal with Lucid and Nuro. Lucid is a car company, and Nuro is a company that makes self-driving hardware. Put those two together, and Uber is expecting to get rid of the most costly part of their company, which is the drivers, which has always been the goal, let's face it. So there are definitely things that are growing here, and you might well expect that Tesla's doing brilliantly, right? So Tesla it has promised robo-taxis. It's not only a vehicle, so a robo-taxi will be built, it will have no steering wheel, just to really prove that it is not being driven by a human. And you might expect that I would have gone away and done my research and be able to tell you how many paid weekly riders that there were in Teslas that were unsupervised, and the number is 0. So there hasn't yet been a single unsupervised paid ride in a Tesla, because it is currently not allowed to do it. If you get into a self-driving Tesla, it has to be supervised by a human. It doesn't have regulatory approval, but Elon Musk, the reason for the extremely large valuation, has promised that 50% of the American population will have access to Tesla ride-hailing by the end of this year. So we've got 3 weeks, and I, for one, am extremely confident that he can deliver, and believe that that definitely makes his company worth what he says it is. And let's have a quick look. We're going to turn more to the internet now. We'll go away from cars. We'll talk about the internet. And we'll talk about my duo streak, if you like. Everybody needs to hear about my duo streak. It was put at risk recently. So in October, Amazon Web Services, a company called AWS, part of the big Amazon company, had a problem. And you may remember the internet, that thing that is designed to live through enormous disruption. Half of the internet broke because AWS broke. And for the people that know, it was DNS, it's always DNS. So AWS went down for this incredibly designed network that has been, for the last 50 years, we've been designing a network with incredible fault tolerance that will work through anything. But now about 4 companies run the entire internet, of which AWS is one. So if AWS fails, everything fails, including my Duolingo streak, which I get really irritated about. But as you can see on here, it's a bunch of other companies, Roblox and Zoom. Actually, no one cares about Zoom anymore. Ocado, couldn't get groceries, Fortnite, Reddit, all the fun things, they all broke. So what happened when AWS broke? Well, Elon Musk decided that it was a great time to start tweeting about things because he can't stop himself. And you may remember a few years ago, he was really touting Signal. He's like, oh, whatever you do, don't use WhatsApp, you should use Signal instead. Signal's a great business run by an absolutely fantastic team. And so he used to tout for it, and now he hates them for some reason. He hates Meredith Whittaker. So he tweeted, "Why is the AWS outage affecting you, Signal? I thought you were decentralized," which is shade if you're a tech bro. Probably doesn't mean anything to anyone else. And then he posted this poster. Here is a complex thing stacked up, and there's a little tiny thing. That's AWS US East 1. That's the bit that broke. Saying that's what the internet's like. He's not actually wrong. That is kind of the problem of what happened. But it's just, he keeps doing it. Like, it's just schadenfreude over and over and over again. It was a problem, get over it. So when he was doing that, somebody responded to one of his screeds. I think at this point he was saying, AWS is in the loop and it can take out Signal at any time. Somebody posted back to him, replied to his tweet saying, oh, Elon, X's API is provided by Cloudflare. If Cloudflare goes down, it will take X out anytime. You may not have heard of Cloudflare. It's one of those companies that you've never heard about until it takes out the companies that they support. Cloudflare is one of the 4 companies that supports the entire internet. So not very long after, the month following that, and this particular post that said if Cloudflare goes down, so does X, Cloudflare broke. It's a great company. It does really good work. It provides loads of free services and it supports lots of good stuff. Cloudflare broke. And it took out some of the most important sites on the internet. It took out Spotify, X, and Uber, and League of Legends, and Grindr. So I don't even know what the point of being alive was. Without those things, you can't eat, you can't go anywhere, and what does Grindr do? So the internet is getting more flaky because of that dominance at the top of the pyramid. It's this winner-takes-all problem that we've got. The big companies are getting more and more valuable, and they're hoovering up everything. So now when one of them coughs, everyone catches a cold. And in the meantime, cyber attacks against the UK, not just failures of resilience, cyber attacks have been getting worse and worse. You may remember that you weren't able to buy groceries from M&S and the Co-op this year, or Harrods, if that's your jam. So all of those companies were attacked, were hacked, and were taken down. But the worst of all of them was Jaguar Land Rover. Jaguar Land Rover was taken down, and as a result, has announced in recent days that it has cost them £500 million from shutting their factories. They were hacked for shits and gigs. They were hacked. It cost them £500 million. They had to send people home. They had to stop their supply chain. The factories were closed. We will talk a little bit more about why that happened and who caused it in a second. But it is also believed to have cost the wider UK economy, all of their suppliers, all the people downstream of them, all the supply chain, it's cost them nearly $2 billion. So there has to be some pretty good reason that happened, right? That's got to be pretty nefarious. Well, who's behind it? Well, the increase in attacks. So the NCSC, the National Cybersecurity Centre, has said that we are at least at a 9-year high in cyber attacks against UK and UK companies. So there have been 439 attacks against the UK in the last year, and 50% of them were classified as highly sensitive, highly critical. So there is a really big problem with UK and UK companies and the US and US companies getting attacked. Some of those attacks are coming from other nation states. They are literally coming from other countries which are funding groups to attack infrastructure and businesses in the West, primarily in the West. The NCSC has called out highly sophisticated China, capable and irresponsible Russia, Iran, and North Korea. So they found a Russian military unit that was carrying out specific cyber attacks. It found hackers, these cyber actors, threat cyber actors, hackers working for Iran. And it also uncovered a year-long exploit against a company called F5 Networks, which will mean something to about 2 people in the room. F5 makes some of the hardware that provides the networking inside the largest companies. 80% of the Fortune 500 use F5 routers and switches, the kit that makes the networks flow. They broke in, they saw the source code, they found exploits, and they can be sitting and just like lying resident inside these networks. So there is definitely a problem with nation states, and Anthropic has also called out. Anthropic, you remember, one of the big AI companies, has also said that they have discovered the use of a fully automated Claude agent hacking on behalf of Chinese hackers. So they've actually released the research paper, and what they found as a result of that is not just they were trying to get Claude to write some code for them that they would use in a hack, but actually they just left Claude to hack things. And Anthropic have discovered that. They also coined the delightful term vibe hacking. So you might have heard of vibe coding, which is when you just let a right thing. Vibe hacking is when you just like grab a beer and it's like, can you hack that? I don't really like them. Which is actually kind of the topic of this next thing, because although it is nation states and it's really nefarious and it's quite troubling, some of the actual the actual hacks that are going on are being done by what used to be called script kiddies, but are now a lot more dangerous than that. You may have heard of Scattered Spider or Lapsus or Shiny Hunters. So those are hacking groups. When they kind of come together as a supergroup and then have Scattered Lapsus Hunters. Scattered Lapsus Hunters is a group of largely teenagers, not only teenagers, but largely teenagers in early 20s, that are brought together. They're recruited in games. They We communicate via Telegram, the chat app, and forums on the dark web. And as it happens, scattered lapsus punters was found to be responsible for the Marks and Spencers and Cole and Harrods hack, and also the Jaguar Land Rover hack. There were 4 people arrested off the back of this. And just to put it into context a little bit, there were 4 people arrested in London and Birmingham. There was a 20-year-old female, 2 19-year-old males, and a 17-year-old male. It is becoming easier than it ever has been before to learn how to be a hacker and to encourage to be a hacker by potentially nation-state actors. Because we know that Russia actually outsources its hacking to people on the internet. It will just hire free actors to do its hacking for it. And it'll pay them Bitcoin. Or other cryptocurrencies are available. So there were 4 arrests made, and when these 4 arrests were made, effectively the hackers that hacked Jaguar Land Rover said that they had stolen 700 documents, internal documents, by getting access to Jira, which is a ticket management system. So they'd stolen credentials to get into Jira, they got 700 documents, and that is how they started the hack and evaded the attack on Jaguar Land Rover that shut all the factories and cost us, as taxpayers, about $2 billion quid. Shortly after the arrests, scattered lapsus hunters said that it was just diversionary tactics. Literally shooting people, look over here, don't look over here, we've just broken Jaguar Land Rover and Harrods. No one's going to happen this year. And then it was like, we're done now, yeah, we had a great time, we're going to go dark. And pretty much immediately they hacked Salesforce and launched a ransomware attack on it and demanded that they pay a ransom. Separately, 2 17-year-olds were arrested for an attack against a child's nursery in Hertfordshire. So this is, yes, it is nation-state activity, yes, it is paid for by large governments, but it is also just a bunch of kids who have got nothing better to do and can learn how to do these things because the guidebooks, the playbooks to do this, and AI tools are available to make it really easy to be hackers. Meanwhile, in Russia, just the separation of these 2 things, in the West we have more companies than ever being subject to attacks. In Russia they have just passed a law, and I remember talking about this several years ago, because they were just talking about doing this, but they've just passed the law that means in early 2026 they will be able to cut the Russian internet off from the rest of the world. So World's Commons Law, the department that is responsible for the internet communications in Russia, now has complete control and can send edicts to ISPs to filter traffic, to redirect traffic, and in fact to just cut Russia off. Why? Because of safety and security. So it is for the security and stability of their nation. So you may remember X, it's one of Elon Musk's companies. They launched a fantastic new feature earlier this month, actually November, which showed the country of origin for accounts that was being used on X. This was clearly a brilliant thing because it would show you, if you're Canadian, it shows Canada, if you're French, it shows you're in France. It also showed that lots of Donald Trump supporters were in places like Nigeria and India. So if the Ivanka Trump fan club from Nigeria, these are absolutely dyed-in-the-wool, true blue American heroes, posted from Nigeria and India. So very, very quickly, for no apparent reason, X rolled that feature back because it seemed that lots of accounts for some reason had the wrong country on them. There is a really serious problem under the hood of this with all of social media, and we're seeing a very, very significant risk of harm to young people, increasing every year, and particularly this year. You may have heard of a company called Character AI that provides chatbots, kind of avatars that people can talk to that have personalities, other people's personalities. It could be celebrities. In an investigation, they actually found that some of the characters, the avatars that people could talk to, there was British teenager Brianna Gay, who was murdered, you may remember, in the sort of social media coordinated attack, and Wally Russell who took her own life because of the use of social media. Their avatars were available on Character AI, as was Jeffrey Epstein's. Obviously a really serious message here, because Character AI was being used in ways that weren't expected, and Character AI has now banned teenagers, removed all of the accounts for teenagers, after lawsuits from US parents. And the FTC, the American Federal Trade Commission, has launched an investigation into 7 companies, including Character AI, Google, Meta, WhatsApp, Instagram, and Snap, in how potential harm could come to teenagers from the use of their products. In the UK, a quarter of teenagers are turning to chatbots to look for mental health support. A quarter of teenagers that are surveyed. And 40% of people that have been involved in youth violence are turning to chatbots for mental health support. I mean, you have to remember that there are a significant number of people that there are lawsuits where people have used things like ChatGPT to seek mental health support and have committed suicide, taken their own life, as a result of the support that they really didn't receive because it's not an appropriate forum. There's very little being done, except there is maybe a bright spark coming from Australia, which in the last week has, in fact yesterday I think, has now banned anyone under the age of 16 from holding any social media accounts from the larger prescribed organisations. So if you are using TikTok, Facebook, Instagram, X, YouTube, Snapchat, Reddit, then they are removing millions of under 16-year-old accounts from those platforms. What has happened, as we could probably expect, is two things. One, there is a flood of traffic going to the companies that aren't prescribed, so people are leaving X and moving to Blue Sky, because that's not considered a threat in the same way that X is. So the teenagers are going to find somewhere else to go. And absolute heartbreak from the people that are left behind. You may remember, as a kid, not being the one that couldn't get into the pub, because you were carded and your mates weren't. I certainly do. The same thing is now happening. So there is absolute outrage from a certain group of Australian teens whose friends are leaving them behind. So they are being excluded by this barrier, which is unfortunate. I mean, you have to try and weigh where the divide is in that. One of the things that you may have come across this year is AI-generated songs. That has definitely been a thing. Companies like Seeto and Udio were able, just with a prompt, I've actually got some somewhere, just with a prompt you could generate an AI song. What was happening is those songs were being flooded onto Spotify. Spotify removed 75 million songs, which was almost more than the actual licensed catalogue that they had. So there's always suddenly more AI-generated songs than there were real songs that they had ever made available. The really interesting thing that happened here is Warner Music, which is I think the third largest music business in the world, was suing Suno. And so Suno was probably the better of the two, Suno and Udio. Warner was suing Suno, took it to court, and was in court for copyright infringement. They settled, and they've now done a deal, and in January they're launching a new platform where you can use any opting-in Warner artist's likeness, their name, the way that they sound, to create your own music, as long as they've opted in, but you can create your own music with Warner artists. Weirdly, Universal Media Group, another of the three largest music companies in the world, and Udio, the other company, have just done the same deal. They're launching their own platform where you can now do things with Universal artists, which is really interesting. Now, this is all kind of crazy. We'll see where it goes, but there is some sanity here. Germany has just found OpenAI guilty, the people who made ChatGPT, of training on copyrighted lyrics, training their chatbots on copyrighted lyrics, which establishes a precedent in Germany that says you can't train on lyrics anymore, which in theory is a precedent in the whole of Europe. So regulation often takes way too long to keep up, but Germany is actually doing a pretty good job.
Changing my tone ain't changing my song. I was born this way, been like...
I hope you like country music. This band is called Breaking Rust and was allegedly the first AI artist ever to make it onto the Billboard country music charts, which is actually a bit of a fabrication. If you want to hear more about that, go and look up Rick Beato on YouTube. This, on the other hand, is Zania Monet, an AI artist created by Talisha Jones. Billboard welcomed Zania Monet as the first known AI artist to earn enough radio airplay to make it officially onto their charts.
Didn't warn me about them boys who wouldn't care. Didn't tell me what a real man sounds like. So I fell for the ones that lied just...
And this one's kind of interesting because the other one is literally just AI slot garbage being thrown up lines there. It just sounded like any other sort of pseudo low-rent country song. But the Zania Monet one is interesting because Talisha Jones, the artist, has said that she'll go around and she'll write poems, and then she will go and use the AI tools to create the art that she wouldn't be able to without other tools. And I think that's kind of interesting. I'm not totally into it, but that is a personality of an artist that she's created. So it's not just music that AI is generating, there is also images. There has been there has been a trend going around on social media, which some of you may have seen, where people are using AI to generate pictures of homeless people in their houses, and then sending it to people, like their parents. And generally the recipients get increasingly irate about this. May appear funny. I've had this conversation recently. This may appear funny, but the police in the UK are now warning people about the AI homeless man prank. Because people are actually, they're calling the police to turn up. Now, Lorraine, I don't know anyone that would do this prank. No. No. Very, very funny. Very funny. Don't do it. Don't do it. Obviously, it's not just images. We've actually seen significant advances in the way that video is being created. You may remember this from 2 years ago. One of my favourite videos ever. This is Will Smith eating spaghetti. Now, there has been some improvement over the last 2 years since that video. This is a new video created with Grok. This is Grok's video generation. This is what we look like a year and a half later. So, we're definitely getting to the point where you can see just how advanced these things are becoming. So, that's impressive, but that's still kind of the social media thing. I don't know if any of you have come across Tilly Norwood. Anybody heard of Tilly Norwood? Let me introduce you to Tilly.
Tilly Norwood, 100% AI generated.
Like if a Sunday roast went to drama school and got BAFTA optimised.
3 seasons and a podcast.
But can she cry on Graham Norton?
Of course she can, and it'll be clipped, subtitled and monetised on TikTok by lunchtime.
We're all going to hell.
So, Tilly Norwood is an AI character that has been created by a British company called Particle 6 in order to launch their own AI talent studio. So, and it's called something like Seeto, which must be an alien thing, but Particle 6 have created this video in order to push Tilly Norwood as a character. Now, this really upset Hollywood, and you had people like Whoopi Goldberg and Emily Blunt who were absolutely furious that AI was taking actors' job and not just people that create special effects. It's fine to replace the special effects people. Really offensive if you replace the actors. So there was a big reaction to this, but we're definitely going to see more of that happening. One of the interesting things that's kind of related to this whole market is YouTube is now absolutely smashing media. This really took me by surprise because I wasn't really expecting this. But we've seen obviously the growth of lots and lots of different platforms. We've got Netflix, we've got TikTok. There's lots of video platforms. But one of the things that's happened this year is that YouTube is absolutely the dominant place that people are watching things on TV. More people are watching YouTube on TV than they are on any of their other devices. And actually, more people are now listening to podcasts on YouTube than anywhere else, more than on Spotify, more than Apple Music. So YouTube is absolutely smashing it. One of the reasons is, if you're Netflix, because obviously, and actually Netflix isn't reported here, but it's considered to be a relatively small number. YouTube, what's the stat here? YouTube has 13.4% of the market share, and then Disney 9.4% of that. So there's a 4% gap between the two of them. So Disney is next, and then Netflix would be considered underneath that. For Disney and Netflix, they have to spend millions producing a series like Witcher, whereas for YouTube, loads of people just upload content continuously. It's a fire hose. So there are so many minutes of things to watch and so much tailoring. Mr. Beast, interestingly, still the largest YouTube channel in 2025, as he has been for years. People spend more time with TikTok than they do with their friends, was another stat that came out this year. Somebody asked me if I was really prepared for what was going to happen with Netflix and Warner Brothers and Paramount. So you may know that Netflix, tech company, said that it was going to buy Warner Brothers, the home of Batman, obviously the only important thing that they have. Netflix was going to buy them, and it was met with sort of a lukewarm reception. Is it good? Is it bad? It's another tech company. We're not really sure where it's going, but it's slightly weird that once again, Warner's is on the table. Remember we had AOL Time Warner in the .com boom? Now we've got somebody buying AOL, and we've got somebody buying Warner Brothers. So I don't know, maybe things go in cycles. We're in the last bit. I always like finishing with robots because they're the most fun thing. This one, I watched this video, and this is a company called 1X, which was a Norwegian company. You remember what I said about all of the investment money goes to San Francisco. 1X has now moved to Palo Alto from Norway because they needed some funding. And this is their product, Neo, which is going to be the world's first butler robot.
Next challenge, load 3 items in the dishwasher.
You got this, Neo, you got it.
Now, some people in the audience might argue Neo is better at doing the washing up than I am. But I don't know. He's doing all right. This isn't my music. This is on the video. This is from Wall Street Journal.
And that took 5 minutes.
Now, I was watching it outside. I've seen this before somewhere. I couldn't remember what it was. Then I remembered where I'd seen it before. This is one of my favorite internet videos. This guy is clearly not a robot. Oh, thanks, Colin. So almost to do it. So, Neo probably did better than a human. So that was slightly embarrassing for Neo. No, this is a Russian robot that was announced recently. Came out on stage, loved the music, not mine. This is generally what came out. It's falling. So the story behind the idol robot, that one. I thought I'd seen that video as well. Apparently the robot was actually better than a human again, so we are definitely a great threat of being replaced by robots. And forget the idol robot, the Russian one, the plan was to only make a robot from Russian parts, from domestic parts, which they have definitely done. Now, remember as well, we were talking about the things that make Tesla special, that's going to justify its valuation. So let's think about what it is. It's ride-hailing, full self-driving, what's the other one? Well, definitely robots. So we've got the Optimus robot, such a tech bro. The Optimus robot is going to save Tesla. That's why everyone's going to have a Tesla robot in their homes, low price of, I don't know, $20,000. Mark Benioff, the boss of Salesforce, went to the Tesla offices to be introduced to Optimus. And this is the video of him talking to Optimus.
Hey Optimus, what are you doing there?
Just chilling, ready to help.
Hey Optimus, do you know where I can get a Coke?
Sorry, I don't have real-time info, but I can take you to the kitchen if you want to check for a Coke there.
Oh yeah, that'd be
Let me know if you
great.
should go.
Yes, let's do that. Let's go.
Awesome. Let's head to the kitchen.
So Tesla and Optimus aren't looking quite as promising, maybe, to justify their enormous valuation. Toyota, remember, not a company with an enormous valuation, are producing something really cool, because I like to imagine that we're going to be racing around on these. This was actually launched at the Japan Mobility Show. It's clearly meant as an assistance device for people that can't walk easily. And I don't know what it is about these robot videos. Why taunt the robot? Like, why do they do it? Just leave the robot alone. They always have to taunt the robot. It is going to come back and bite them. So anyway, I like to think that those are effectively racing robots, and you can sit in them and you can see them down the street. So that's clearly why they're different colours. Now, one last robot for you. This is a Chinese robot. We've been talking a little bit about the ascendance of China, and Carl Pei was the boss of the phone company. Nothing. Says if you're serious about hardware, you have to go to China. So a British hardware company. And you can kind of see why. Now, I'm going to show you this video. I'm still not 100% convinced it is not AI generated. There are bits of it that make me think it definitely is, and there's a few bits that make me think it isn't. So I'm going to show it to you, and you're just going to have to make your own mind up as to whether it's real or not. But you know I said you shouldn't taunt robots? This is why you should. So that's a Chinese company called Unitree and their G1 model, and I'm pretty sure that there is actually somebody wearing a mocap suit off screen. So I don't think, no, literally not being funny. If you watch a lot of their other videos, they do a lot of their demos with somebody wearing a mocap suit, and they're doing things like juggling. So it's very impressive, but it's not fully sentient. And I'm still not convinced it's actually not AI generated, but still potentially very impressive. And recently a Chinese robot actually walked, was it still like 3 marathons or something? I think it walked 70 miles in Shanghai. So there is significant progress in robotics being made in China that isn't being made. But I say that Boston Dynamics is still doing a fantastic job in the US. And that's pretty much it. But I need to leave you with some predictions based on everything that we've talked about. So I did say there would be predictions. I can't remember what my last ones were. So I will give you a sense of what I think is going to happen in 2026 based on all the things that we've seen. I do want to take you back to one of the slides that we had earlier. And I've changed this slide a little bit. I've put another data source on it. One of the things that's feeding into my predictions, if you look at this slide, is the fact that this is the S&P closing price. So that's the S&P 500 is how much it's worth. And that red line is the graph that you've seen before. It's going up and up and up. Now, the blue line, the one underneath it, is the number of new jobs being added to the job openings in the US economy. And those two lines track really, really, really closely until 2020. It goes a little bit weird because of COVID, as you would expect, and then it dips away again. But then they track. Something specific happened to decouple those two things in about 2022, 2023. Now, you might, if you believe in this kind of conspiracy theory, posit that was related to the launch of ChatGPT. I think there's more complex things happening there. One is the value of the S&P 500, the fact that it's going up like that. The thing that we've talked about, this is fake money. The S&P 500 shouldn't look like this. It's looked like this once before in living history, and that was right at the end of the dot-com bubble. So around the middle of 1998, it looked just like it does now. The same price to earnings ratios, the same dependence on a small number of businesses. We are at about 1998, and crash happened late 99, 2000. So all signs point to there being another crash, which means this is too high anyway. If you take the tech companies out of the US economy, it's flat, and it's been flat for a while. So all of this growth comes out of those 7 companies, which is really, really synthetic and really worrying. Now, we're also seeing that jobs are not being added to the economy. Now, in theory, the president of the US should be bringing jobs back into the US economy, but that's not happening. You might say it's not happening because of AI, but it's more likely that's just a useful excuse. We do know that the tech companies massively overhired in the pandemic, and as a result, they started letting people go again, and so there is a natural reluctance to add new jobs into the economy. And this is non-farm jobs, just to be clear, so it's office worker jobs. But this is a really, really worrying, this is probably the most worrying graph of all of the ones that I've been interviewed today. The decoupling of the US economy and new jobs being added means that we are not making people richer, except the 10% that are responsible for 50% of consumer spending, and the 10 people that are responsible for most of the wealth of the US. So, what are my predictions? Really, on that bright point, well, I think the air bubble is going to burst. I have absolutely no crystal ball here, and you shouldn't look at me for any guidance at all. But if I was to look at what happened last time, and just the fact that we've got AOL and Warner and all of those things on the table again, I reckon if history repeats itself, it might be Easter. I don't think it is. I don't think it's really that challenging to say that it will burst. The only thing that is going to be up for grabs is whether it will just deflate relatively gently, or whether it will actually go hot and take up all of the things with it. I think we'll see people claiming that artificial general intelligence, the ability of something not to be trained but to learn itself, has been reached next year. I think we will see that. On the train when I was coming in, there is an ex-Googler who now works in a company in Tokyo who has claimed that he has reached AGI. I don't think we will reach AGI, but I definitely think the claims will come thick and fast. I took a whole thing of quantum processing out of this, but in Saudi Arabia, they have just installed a massive quantum processor That's actually Saudi Aramco, the energy company that I talked to you about. There are real concerns that quantum computing will break the cryptography of Bitcoin. If it does, the value of Bitcoin is effectively worthless. So I'd like to think that hopefully they will break Bitcoin just because I'm a chaos monkey and that would amuse me. I don't have any Bitcoin. I think that AI will interfere with US midterms. I don't know which way that will go. I think you could place bets on it. I don't know quite what it will look like, but it's almost certainly social media. Maybe it is also AI vibe hacking, and it will probably be Russia. Whether that is enthusiastically supported by the president's Russian friend or not, I don't know. I think job losses that are related to AI will continue in the US. I don't think that's actually AI replacing jobs. I think it's more likely that people who are using AI as an excuse not to pay people to do any work. I think, and this is actually already happening, there's going to be a computer shortage of memory chips. So again, I wrote this yesterday, this is already starting to happen. Memory chips are starting to run out. It's not processing units, it's memory. So if you need a new laptop, I would buy it now because it's going to get way too expensive next year. If you're buying laptops for people that are in, I would probably stockpile a whole bunch of them and keep them in the corner. Be a good idea. I think mega hacks are going to be even bigger. So I think that we are going to see ever increasing attacks against, certainly particularly nation-state activity, against critical national infrastructure. It won't just be regular Land Rover, there'll be energy production, food production on things inside in the UK. You can imagine that if something hit the supermarket supply chain in the UK and took out a few of the major UK suppliers or a major port, we would be absolutely screwed as a tiny island. I think, if I'm being brave, we've talked about solid-state batteries for quite a long time. We haven't had a breakthrough. That's moving from some lithium-ion batteries. If we get solid-state batteries, that's a really, really big increase in the energy density of the batteries that we have. That would be a step change in battery electric vehicles. I have no reason to believe it. I just needed to say something that I'd look stupid about next year. A Tesla correction? I mean, Elon Musk can keep saying he's going to do things by the end of the year, but at some point people have to realize that it never happens. But it's been 10 years so far and nobody ever has. And my final prediction is the US president. Something. I don't know. I don't know what. Neither does he. That's the best thing. But he's going to do something, so there is no chance I'm not getting that one right. And that's it. That's all I have for you. So in a minute we'll take questions, but thank you so much. You've been a fantastic audience. Beer time, mate. Beer time. Beer time.